Hey everyone, today we're unpacking personal insurance, what it is and why it matters. You're listening to Mind Over Money. Hey, my name is Lachie and I'm joined, as always, with Archie Franz. G'day, Archie.
G'day, Lachlan.
Or should I say good night? We're recording this at night time and our dogs were both barking before we hit record. So we'll see how we go with this one. Question for the audience. Have you ever thought about what would happen if you could not work tomorrow? If all your income stopped for a week, or maybe 2 weeks, or 2 months? Or what about 2 years? Would you have enough savings to keep paying your rent or your mortgage? Look after your family? Most people wouldn't. And that's okay, because today we're actually talking about insurance and how we can use personal insurance to protect our income and protect those who depend on it. Okay, everything today we're discussing is general in nature only, and we do recommend you attain personal advice to assess your own situation. Okay, Archie, insurance. First question I had on my mind was, what is our income worth and why should we insure against losing it? I mean, the risks of losing our income are pretty small, aren't they?
Not really. No. When we know the stats show us that 1 in 3 people are going to have major health issues or major injuries, that are going to have a big impact on their life before we finish work.
Right. Oh, wow. Okay.
So, and the stats have been showing that that's been increasing as well.
Especially with these e-bikes.
E-bikes.
I nearly got killed by one yesterday. Tell you what, they need to put a speed limit on that.
I think they do have a speed limit. So, yeah, and we have noticed that, we're seeing a lot more claims now for younger people. So, it used to be the status was that, it was older people who got sick or injured and couldn't work. But we're seeing a lot more in younger people now as well. Cancer is having a big effect on that.
Yeah. So what is our income actually worth? What is the Australian typical income?
So when we look at insurance, a lot of us will, maybe be thinking that, it's not really worth it. And we do have a low level of insurance in Australia because that's the Australian way of thinking about it. But if we look at the numbers and think, the typical earnings in Australia is $63,000 per annum. And then if we looked at that over a lifetime of working, that works out to about 3.9 million that we're going to earn over our lifetime.
Oh, wow.
That 3.9 million is what's going to buy our house, pay off our car, put food on the table, take us on holidays, achieve all the goals that we want to achieve. So, yeah, if we take away that 3.9 million, we're back to living on the government, and that's not a pretty situation.
No, that's a lot of money just for a typical wage of $63,000 a year. That's gross, right? And then that 3.9 would be with inflation, correct?
Yeah, yep. Yeah, increasing at 2.5% per annum with inflation.
So I guess what we're actually insuring is not the $63,000 this year. We're actually insuring about $4 million over our lifetime, our working lifetime, which is all of that money we need to live off. Gotcha.
Yep. Yeah. And when it comes to insurance, we don't have to insure 4 million. We just need to insure what's needed to get us, to achieve what we want to achieve. So it can be a lot less than 4 million that we actually insure. But that's the sort of money that's at stake. And that's the sort of money that means, if we take that money away, then we've got definite problems to actually live our life.
Yeah. I guess there's both the financial sense and the non-financial. So, you've got that stress of maybe having to raise kids without that second income or, and so we can do all this for about what, the price of insuring a car or a home?
Yep. And because that's the other assumption that people make, that it's too expensive. And when we make that assumption, it stops us from doing anything. So hopefully, as people are listening to this podcast today, we can get rid of quite a few assumptions that we make around insurance. and start to get some more clarity around how important it is and how effective it is.
Well, that's what we're all about at the Mind Over Money podcast, is removing those assumptions. So it sounds like the first takeaway point of this is our income is worth more than we think, and our income is our biggest wealth building tool for sure. So let's take a step back. Archie, what is insurance in its foundation?
So insurance is all about pooling money together to help out people when they're in need.
Okay.
So we don't need to call on insurance until we need to, and hopefully we never need to. But if we think about house insurance, that house insurance is we're pooling our money with other people who are insuring their houses, and a storm goes through, rips off roofs. Well, those people who have a damaged property, our money goes towards fixing their roof. That's basically it. So it's spreading out the risk of, I don't have enough money to replace my roof. You don't have enough money to replace your roof. So if we pool our money with thousands of other people, then we can pay just a small amount of premium, and it protects all of us because the insurance companies are actually able to calculate what the risk is and tell us what premiums they're going to need to meet those risks.
Yeah, okay. So it's basically a contract to transfer the risk to that insurance company, which is legislated on Australian law and protections, and they're the ones with the data, and they know how much money is required to meet those obligations when those events occur, and also they have a lot of data around maybe the predictions of when those events are likely to occur. That is something we have seen in the financial industry, that some of the best data actually comes out of these insurance companies. They really have the knowledge and expertise on what's going on. And they need to, of course, to calculate their risk to ensure that they remain stable and secure. So insurance is all about helping people. That's what I got away from that.
It's about us coming together and pooling our resources. That's what it's about.
Yeah, I love that. It's just a practical way of helping your neighbor, I guess, as well.
Yep.
Just loving the people around you by putting your money together. And I guess we don't have the sufficient financial resources, right? We can't self-insure $3.9 million, for example.
No, that's probably why people take out Gold Lotto.
Yeah. Well, if you're listening and you have that money, you're probably not listening to this podcast. But if you are, good on you. Okay. So what's the difference between personal and general insurance? Because we hear a lot about general insurance. We get a lot of TV ads about it.
So under general insurance, you can pretty much insure anything. So, from your phone screen, through to your chihuahuas, and anything else, you think about it, you could get insurance for it. That's general insurance. And general insurance is not specific to you. It's just a basic policy with conditions attached to it, and you have the option to buy that policy. So that's general insurance.
And they can exclude, they can discriminate however they see fit, right? And they can cancel that policy at any time.
Yeah.
Yeah.
Yep. So what we see is, we have flooding, and then we have people on TV saying my insurance isn't paying out because it didn't cover flood. And the thing with general insurance, it's up to you to figure out what it covers and whether that insurance is suitable to your needs. Yeah. So whether you take out a car insurance policy or a house policy, it's up to you to figure out whether that policy is suited to your needs. So if you live in a flood zone, you got to find insurance that covers flood. It used to be, when I was a kid, that all insurance covered flood. It was a requirement of the government that all insurance covered flood. But then, people got into politics and they removed that requirement and allowed insurance companies to start adjusting their policies. And so you could get a cheaper policy that didn't cover flood, so people would take out the cheaper policy.
There you go. There's lobbying in action.
Yeah, yep. So when we compare it against personal insurance is written to you. So therefore, you've got to give the insurance company enough information about yourself that they can make a risk calculation of what your potential claims will be. And so they're going to base that on your job and on your hobbies and your personal health. They're going to be looking at you as to what they can actually protect. And in some instances, they can't protect you because you've already got problems. It's like if your car is all smashed up and you ring up the insurance company and say, I want to take out insurance for my smashed up car. They're going to go, sorry, we don't insure smashed up cars. We only insure perfect cars. It's the same with us personally. But that personal insurance, it's tailored to you. It's specific to you. And it's guaranteed that the insurance company can't pull out of that contract. So once that contract goes in place, they will protect you.
And if there is a claim, you just have to keep paying the premiums, and they will have to keep making their payments and honoring that agreement.
Yep.
And if you were to continue that policy and you had to claim again, would the premiums go up?
No. So the premiums are contracted. So the premiums on personal insurance, they can't adjust them for you and your situation once something has happened.
Yeah, unless you switch insurance companies.
Unless you switch insurance companies, yeah.
Yeah. See, that's a big difference between that and general. Whereas if you've had a couple of car accidents, then you might find a hard time getting an insurance the next time around.
Yeah. But if you have an income protection policy and you get sick or injured and you have a claim on it, that policy stays in place until you need it again. Whereas the lump sum policies are different. They'll pay a lump sum and it may only pay once and then it's finished.
Right. Gotcha.
But the income protection policy can keep on going.
Yeah, because I had this with a friend. They were claiming on their income protection and they were worried to claim because they thought the premiums would go up if they claimed.
Yeah, no.
Seems like a common misconception.
Yeah. The insurance companies do change premiums based on risk. So because of COVID, we've actually seen a rise in insurance premiums because people are getting sick and unable to work. And so, therefore, the risk to the whole pool of people who are insured has gone up. And so the insurance companies have had to raise insurance premiums because of that.
And just on that, I heard that another reason why insurance premiums have gone up recently is because a lot of people are getting older and coming off the policies, correct? And then we haven't had enough uptake with new policies for various reasons. Yeah. Yeah.
It's a pool. So it's all about having new people come into the pool all the time.
Yep.
And if you don't have those new people coming into the pool, yes, then there's going to be problems because people are going to be pulling out of the pool and the pool will start shrinking. And so the resources start shrinking, so the premiums start going up. Yeah.
When's the best time to take out personal insurance?
It's definitely the accumulation time for us.
Mm-hmm.
So when we first start working, that's usually when we're going to need the insurance the most because we've got our whole working life in front of us. And so we've got no way of protecting that $4 million or $3.9 million that we said before. And so the most important time is as soon as you start working. And it's not that expensive. So as we mentioned there before, but we often go, I don't need that yet because I don't have a house and I don't have this. But what we're talking about here is protecting our most important wealth building tool, which is our income.
Yeah, definitely. Especially if you're a young person and you go traveling, break your leg skiing in Japan, say, just using a hypothetical here, and you're out of work for half a year, that income that you earned, that you could have earned, that's money to save towards a home deposit to get into a home. That's money that could go into your super, which is growing over your lifetime. So there is a lot at stake, even as a young person, even if you don't yet own a home or you're not married yet. Yeah, that income, when you compound it over time, is worth a lot. So yeah, it is worth protecting.
Yeah. Look, it's more likely, a broken leg we know we're going to recover from. So that's not really what we're insuring for. We're actually insuring against viruses and against cancers and major organ problems, major health problems that can occur at any time to anyone. That's actually what we're insuring against. So, and often when we say, broken leg, broken arm, everyone immediately knows that we're going to recover quickly from that.
Yeah.
So therefore we think, we don't need the insurance, but it's the biggest stuff. That's the stuff that really impacts us.
Yeah.
And as you said before, there's less of that happens So therefore, there's less premiums to be paid out. So the cost of the insurance isn't that high.
Before we get on to costs, it does sound like insurance, it plays an important part in society, both in individual lives, I guess, and in the economy, in society at large. And from what I've heard, the personal insurance industry does have a high level of integrity. But why should we take it?
Yeah. So when we look at ourselves individually, this is what we see all the time in finance, is that confidence is the key. So when we're confident, we make good decisions and we can do really well. When we're not confident, so if we're insecure about our finances, that's when we start gambling, and we start doing silly stuff that can actually really destroy our finances. And we totally miss the mark, when it comes to building wealth and getting ahead, and then becoming financially independent down the track. So yeah, that confidence, that's the key part. And that's why we take insurance, is we want to pool our resources with everyone else and have that confidence that, if anything does happen, we're covered and we can keep going. Yeah. And we see this a lot when people are taking out a home loan. I can see how nervous people are because, they're thinking about how much money they're going to be owing. They're thinking, how in the world am I ever going to pay this thing back? What if something goes wrong? And you can see all that ticking away, and it stops people from doing stuff. It'll stop people from, buying a home or changing jobs even, because again, we lose confidence. We won't even change jobs. And sometimes that's what we actually need to do.
Yeah. As we were talking, I was just thinking about insurance is like having a plan A. We need a plan A, the best plan, in case something goes wrong, because plan B sucks. Plan B is relying on government support if something goes wrong. And we don't want that. So, insurance is like putting in that plan A, which is the ideal plan. So something does go wrong, we can just keep moving forward because that company is going to help us get back and look after us in that period of time. And I've heard, Archie, from you and others, some really good stories about companies doing just that. Insurance companies helping people transition their career, get the rehabilitation support, and they actually want them to get back to work because they know that when you get back to work, you're at your best. And of course, it's good for them too.
That's right. Yes. Statistically, the best place for us to be is working. It's best for our health. It's best for our marriage and, relationships and everything. So therefore, insurance companies have a vested interest to get you back to work. Whereas, if we're relying on government support, which there's a basic government support there, but it's so basic, it's terrible. And, if you're trying to rely on that, you don't get the rehab, you don't get back to work, and whereas, with these insurance companies, they'll help you buy computers, they'll help you buy suits. I've seen them do all sorts of things and get people back to work again, and then you see people take off again. I've seen people, come out of this with double the incomes because, they've been re-educated and got themselves into better jobs and earning a lot more money. But it was all because they had the insurance, and the insurance put them through, 4 years of education at university to get them rehabilitated and back to work again. Wow.
All right. Well, after the break, we're going to talk about the different kinds of insurance and how much you should pay for your insurance. Back in a bit. Hey, thanks for listening to Mind Over Money. Today's conversation is a really important one, but it isn't something we recommend you do yourself. Putting personal insurance in place is complex and it requires expert support, but it is worth it because then you can have the confidence knowing that you have the right policies to match your unique situation and your best interest. Plus, when you work with an expert, you get that ongoing support to review and update your insurance over time. So to get expert help, we recommend talking to one of our wealth partners. These are companies that we know and trust and recommend our listeners to implement their financial strategies. So to get connected to a personal insurance expert, head to waymakerpodcast.com.au and click Get Financial Help. That's waymakerpodcast.com.au. Okay, so what types of a personal insurance are there? Can you walk through them and how they're sort of typically linked or packaged together?
Yeah. So you've got income protection, and when you're talking personal insurance, income protection is very, very specific. There is general insurance income protection. That's the sort of stuff you probably don't want to touch because it's general and it's not specific to you and your situation. But with income protection, it pays you a monthly benefit based on your income, and it can pay you that monthly benefit right through to age 65. So it protects you against temporary disabilities as well as permanent disabilities. And the other thing it does is that if you do get back to work, but you get back to work at a capacity, say, of 3 days a week instead of 5 days a week, it'll make up the other 2 days for you.
Oh, that's
so you still have a full income.
Yeah,
that's
good.
So pretty much no matter what happens to you, whether it's sickness or injury, and it limits how much you can work or the type of work you can do, then you're still going to have a full income, or close to a full income there. With this, we look at that's a monthly income being paid to you. With this, we combine lump sums. So lump sum policies just help overcome any big needs that you have. So if we look at total permanent disability, if we have a permanent disability, we're going to have rehab costs. We're going to have house costs that have to change. We have car costs. There's loans to be paid out. So it's good to get some lump sum in to pay out loans and, put stuff in place that's going to be needed. And then you've got your income protection to pay you your monthly income over your life. So, and through that income protection, you still got super being paid. You're still building your financial assets. So you're still going to have your financial independence there. And you just combine it with that lump sum. Then we've got another lump sum, which is trauma. So trauma is very specific events that occur that won't kill you, but you're going to be very sick. So things such as cancer, heart problems, stroke, head traumas. There's about 40 of them, different events that can occur, including blood diseases and major organ problems. And again, it's a lump sum to pay you money to pay for treatments, to pay for lost income, because quite often when a trauma event occurs, the whole family's affected. And so you might be getting paid your income protection policy, but your spouse may not be getting any income. And there's lots of hospital visits and lots of stuff going on. So you got to be able to protect both your spouse's income as well as your income, and cover off on any medical costs and stuff there. So that's another lump sum that we use in conjunction with the income protection. Okay. So all of those ones I've just talked about, you're still alive and you're still potentially going to get back to work. But what happens if you died yesterday? And if you died yesterday, that's where life insurance comes in. And again, this one doesn't occur very often, but it does occur, where we pass away prematurely. And so again, it's a lump sum payment to provide the family with that lost income, because you're no longer around. And it's to ensure that, the kids go to school and, that the financial investments are there and that the family has that security to get on with life. Because it's a major change, when that occurs. And not having to worry about money is a good thing.
Yeah. And so how are these insurance premiums calculated?
So I always say to people that you got to set a budget around insurance premiums because, the sky's the limit when it comes to anything. And, so we found that around 3 to 5% of people's incomes can generally get them the level of cover that they need. And it's you're not taking too much money out that you're still paying off your house and you're still living your normal lifestyle, but you are paying something to your insurance covers there. And insurance premiums are calculated on risk. So the insurance company is assessing you as an individual as to what your risk is and what your potential claims could be in the future. And so that's how they're calculating the premiums. And so the lower the risk, the lower the premiums. And over time, we need to keep adjusting it. So as we're building our assets, and we're building our finances, there comes a point in time in the future where you just don't need the insurances anymore. So we should be able to reduce insurances over time as we're building. We pay off our home, and we've got superannuation building, and we've got other investments building. And so, we can find we get to a point where, hey, if I didn't work anymore, I've got enough income coming in that, it'll meet all my needs.
Yeah.
And it'll meet my family's needs. So therefore, I don't need the insurance anymore.
But I've seen in some cases, though, people with a substantial amount of wealth, they still keep the insurance at a low level. Why is that?
Actually, yeah, you can find that when people are in a good financial position, you can keep the insurance because it is still a security measure.
It's such a small percentage of your income then, I guess.
Yeah.
Yeah.
And it's still a small percentage of your income. Yeah.
Yeah.
So you always weigh it up.
Yeah. Yeah. So it sounds like a very small amount to protect a lot of things across those different categories. And so as we build those income assets, paying down the home loan, say creating other investments like super, we don't have to insure as much. You see, as our risk goes up, we just adjust those premiums to stick within our budget. Yeah. Okay.
Yeah. So our risk is going up as we get older, So the closer we get to age 65, the higher the risk is that something's going to happen. So, yeah, and it's good that if we've got things paid off, then we don't need as much insurance, so we can keep reducing the insurance over time.
Another question I want to throw in here is we see insurances inside super. What's the best way to pay for insurance, just generally speaking? Is it some in super, some with outside super? What's the difference? Why do people do that?
Right. So this is based on where you're at and what's best for your situation. So if you're needing your personal income to save for a house deposit, you may not be so keen on paying for insurance premiums. So because it's going to interfere with your house deposit. So you can pay for your insurance premiums through your super to help you get through that time where you're saving your house deposit. There's also tax benefits through superannuation as well. So this is where you got to get the personal advice because it's totally dependent on your situation and whether it's going to work for you or not. Because the big danger if you start paying for insurance through super is that if you leave it in there, it's going to eat your super. And that's going to be detrimental in the long run. So if you do, stuff in superannuation, you've always got to be countering it and making sure that it's actually helping you get ahead.
Yeah. So speak to an expert to get that advice. Yeah. Okay. Last question. What happens? We get to the end of our life and we've never claimed on our insurance. I've heard this a couple of times from people.
Yeah. We should be celebrating because that is the actual goal. We actually want to get through our life without using the insurance because, the only reason the insurance is going to cut in is because something's happened that we don't want to have happened.
Yeah.
and so it's much better if we don't claim on it. And the good news is, your money has gone to helping people who needed help. So you didn't need the help, but someone else did. And so all those premiums that you've paid has gone to helping other people. And I can tell you now that people with insurance and who actually receive claims through insurance live a much better life than people who are left to the government schemes. Yeah. And that's what this is all about, is that we want a better society, we want a better life, and we want to know that, it's not just us that's protected, but, the people that we live with are also protected.
I love that.
And we all win. We all win.
Yeah. I love that. That's why insurance is so good. It's not about hitting the jackpot. It's about living with confidence by transferring that risk and knowing that we're helping others in the process. So it's not just about us. It's about helping everyone together we can do better. So that's really cool. All right. Well, today was a really important conversation. So I'm glad we had it. I think, we've been getting a lot of questions about this, so we just wanted to sit down and just hit record and talk about it. I think we'll definitely talk about general insurance as well in another episode, because there's a lot of marketing around general insurance and a lot of things that can catch you out, and a lot of our money can go towards that. And probably not enough towards personal insurance sometimes. So hey, if you've been listening to this episode and you're thinking, okay, I think I need some personal insurance, again, go to waymakerpodcast.com.au and click get financial help. That's the button. Yep. And we'll connect you with one of our wealth partners, someone who is an expert in personal insurance, like a financial advisor, like yourself, Archie. So make yourself available to that. And again, everything we discussed today is not financial advice. It's just general education purposes only. So we do recommend you go speak to someone before taking out any policies. Don't get your advice from a podcast. But we hope today's conversation helped you learn a little bit more about personal insurance, why it matters, and what you can do to live a life with more confidence.
Yeah. So thanks for listening. And, just to wrap this up, I hope we've changed some of your mindsets around insurance. And I hope we've broken some of those misconceptions that we have around what insurance is, especially personal insurance, because this is the one that really counts, these insurances, because they make the world of difference to us and our families and to our society. So, and they are really good. They're also the ones that have the least amount of problems. So when it comes to the complaints that go through our financial tribunals, these ones don't usually end up there. It's all the general insurance stuff that ends up there. When people realize that they bought something that probably wasn't suited to their circumstances.
Awesome. Yeah. All right, guys. Thanks for listening in today. We'll chat to you again next week.
Cool. Thanks, Lachlan.
Thanks, Archie. Hey, our dogs didn't bark. That was good. We made it through the podcast.
Yeah. Yeah.